Okay, welcome. So I've had a number of people contact me and say they've found the charts, the commitment of traders charts posted on the Sword and Shield Forex.com site to be very helpful, and they're thankful for that and whatnot. But I've also had a number of users that say, it's great, but can you give us more? Um, and I thought I'd try a new format that might be able to capture a little more for those that are not really getting the analysis too much, or are finding the analysis difficult to do on their own or whatnot. So I'm just going to run through this quickly and try this out and see if it works. If you like it, let me know. It's going to be a little bit of rambling, but that's okay. And I do this weekly, so it shouldn't be too much effort on my part. But without further ado, let's get going on it. Don't have that much of a dramatic week to start on. We can see that there's some weakness in gold, the euro, bonds, strength in commodities, bit of a bullish positioning on the Canadian dollar, but essentially U.S. index strong, the S&P strong, emerging markets and bonds weak, and the risk currencies, the CHF, Swissy, and the yen are weak. There's still general risk off feel. Um, and we can see here in the table format that the held in a bullish position, net positioning against the US dollar. We have the USD index is held in a bullish position. It's up 76% to 78%. The S&P, emerging markets, Mexican peso, gold, and the euro. As for held in a bearish positioning, we have bonds, commodities, the VIX, fear index, the pound, yen, kiwi, Australian dollar, Canadian dollar, and the Swiss franc. As for just the currencies, only the euro and Mexican peso are held in a bullish positioning, net spec positioning versus the US dollar. The euro has dropped though a bit, from 53 to 51% long positioning, and the Mexican took a bump up, 57 to 59%. The rest of the currencies are still held in a bearish positioning, and we saw the US dollar took a nice hit up, so it's pretty safe to say that the US dollar is king right now and still quite strong, and that's not changing. We do notice here some anomaly with the open interest. This is the change in open interest of the pound is significantly higher than all the other currencies. We can see in table view here the pound. We can see that this is the speculators that are long, and this is the speculators that are short. Those that are long increase their positioning, and those that are short also increase their positioning almost by about the same amount. And the commercial players, the longs and the shorts, also increase their positioning for the pound. We could dig a little deeper by looking at the raw data here. The open interest went from 190,000 to 219, almost 220, so a big increase. And we can see that the commercials with long positioning, they increase their positioning. Or sorry, these are the speculators. Speculators with short positions, they also increase their positioning. And the commercial players, which is commercial long and commercial short, also increase their positioning as well. So everyone's adding on to their the ratios aren't changing, their outlooks aren't changing too much, and that may explain the big bump in open interest that we had without much changing in positioning or outlook. So again, in table view, there's a couple things to highlight, and I like to look at one, anything that has sort of standard deviations at extremes, in this case 2, -2, or +2 standard deviations, but also what I call harmony positioning, which is basically just consensus amongst the players in their outlook. And key to that is just knowing that commercial players are in the game to hedge So if they expect prices to go up, they're going to take a short position. If they expect positions to go down, that's their outlook, they'll take long positions. They take the opposite position of their outlook. And for a consensus move, you would have the speculators who are in it to profit move in the same direction as the commercial traders. So you want the long speculators to have the same outlook as the short commercial traders, and you want the short speculators to have the same outlook as the long commercial traders, because they share outlooks and they share outlooks. So if they're positioning the same, these players, it means there's some consensus and harmony in the outlook, and it doesn't happen all the time, but it's worth paying attention to when it happens. And in this week, we have a few of these actually. We have the Australian dollar um, with a bearish harmony move, as we'll call them. The net speculators positioning has gone to the bearish side. They've decreased their bullish outlook, and the commercial traders have become more bullish. So together, this is a bearish move. Those in a profit have become more bearish, and those that are hedging have become more bullish. They both expect weakness in the Australian dollar. And then when you boil down to the traders, the players as well, there's harmony for the a bearish outlook as well. So a strong harmony move in the Australian dollar, and then we have a bullish harmony move in the Canadian dollar. The same thing. Most of I noted that there was a big bump up in the speculators' net positioning, but we can see it's mostly those that are long increasing their longs than shorts getting out or whatnot, because shorts got on board a bit more too, but just not as much as the longs. So there's some strength in the Canadian dollar. It isn't exactly a harmony positioning because of these shorts, but these speculators really piled on. The other harmony move though is in gold. Bearish gold, same thing. As well as the New Zealand dollar, also a bearish signal. So if we start putting this together and just use it as a general guide for our trading and our positioning, we know that strength, we have the US dollar. We also have the Canadian dollar this week. It had the largest increase compared to everyone else. There's also some strength in the peso, which also had an increase this week, 57.58% to 59.09. Weakness, we saw that the Australian dollar had a nice signal for weakness, as did the New Zealand dollar. And a final one that I may have missed was actually the Swissy also had a nice harmony move in positioning with consensus among the players in the bearish direction. Although the getting some flags here that it may be coming slightly oversold, and it is still at this very low positioning percentage, and it's been that way for a number of weeks. But it still could have room to maintain its weakness. I'm going to leave it here, although it's a little less certainty. Now, most of the other currencies, I'm just going to call neutral. The euro is in a bullish. It is held in a bullish position, but it decreased from 53 to 51 last week. The pound didn't really move that much. The yen didn't really move that much. What are we missing? Yeah, so we're going to put in here the euro, Great Britain pound, and the yen. So now we can take these flows and changes in speculator positioning and use them to guide our to derive some ideas for trading pairs. Now, obviously, you could pair the U.S. dollar against nearly every anything, with some the euro and peso a little less certainty on the direction of that. Um, However, if you wanted some more increase your probabilities, you could trade it against these weaker, pair it against these weaker currencies, or even the neutral currencies. The Canadian dollar, I like the Canadian dollar versus, I like to keep currencies with similar attributes together. So instead of a Canadian uh, dollar Swiss franc pair, I'd pair a Canadian dollar with the other commodity currencies, although they have been selling off under Canadian strength for a few weeks, so you have to look for a pullback or rollover on those. And the strength could also be paired with the neutrals. For example, the pound, Canadian dollar short, for instance, or the CAD CAD yen. The final pairings you might do are pairs, neutral currencies paired together for some range strategies, like the euro yen, the euro pound, um, or even in the other direction, a neutral currency with a weak currency. And again, keeping attributes together, you might go with the two risk currencies and perhaps a yen, CHF, Swiss franc pairing of that would be long the yen versus the Swiss franc. So there's an idea of how to get a quick idea for potential pairs and trades for the week. Obviously, the technicals, you need those behind you as well as sentiment and themes and stay out of the way of data and whatnot. But hopefully, you find this of some help. And I may get in the habit of when I look at those charts, as I always do, to record some of those videos as well if you're finding this useful. And if you do, um, you can get in touch, drop me an email, subscribe to the channel, follow me on Twitter, or uh, sign up on the Forex, Sword and Shield Forex.com site. And yeah, good luck trading out there, and hopefully you find this of some usefulness. Thanks.